I'd like to just talk about three themes, which I think come out from my experience of operating across so many African countries. The first is that it's quite clear when you look across Africa that Africa's countries' policies towards mobilizing capital is actually geared more towards mobilizing capital from abroad. So you'd have an Africa-China conference in Africa, European conference in Africa, American conference, but you never have an Africa-Africa investment conference. Now, what that does, and the implications of that is that three themes that I think drive the potential to mobilize capital in Africa are completely ignored. One is the issue of deregulation, putting in place policies such as the removal of exchange controls to facilitate the free movement of capital across Africa. And it's very interesting that if you look across Africa, the smaller countries have been far more courageous in removing exchange controls than the bigger countries that would have a significant impact on capital flows if they removed exchange controls. The second theme I'd like to talk about is regionalization. It's clear that Africa is made up of a lot of fragmented countries, 54 countries in the continent. Unless Africa is able to create larger markets, then we have a lot of very small countries that in themselves create smaller markets, which in themselves are not that viable. I mean, I work in Togo, I live in Togo. It's 5 million people, 6 billion GDP. But next door is Nigeria, next door is Ghana. And I think Togo would have greater access to a much bigger market if the policies and the infrastructure allowed that, and would become part of a much larger market and a much more viable economy. And I think the third aspect I want to talk about is harmonization. Across Africa, we have different policies, different rules and regulations, and the net impact of that, again, is to create fragmented markets. So I think that going forward, if we're to be serious about mobilizing capital in Africa, we've got to look very closely at how we can bring down these barriers. How do we make Africa more open to, for example, South African capital? I was at a panel yesterday where the head of the PIC, for example, said they had about $7 billion to invest in Africa. That's a significant amount of money. We need to create, put in place measures and take down barriers that will enable funds from, for example, South Africa to be invested across Africa, or for Nigeria, for example, which also has some capital, to be able to invest across Africa. So I think the challenge for us in Africa, and looking across the countries that we operate in, is to actually look a little bit inwards and to say to ourselves, beyond attracting international capital, how can we create an environment for African capital, not only financial capital, but also human capital, to be able to move freely across Africa and to enable the development of Africa as a continent. And I think for me, it's translating that objective into action that's been what's been missing in the equation so far. To answer your question, banks don't operate in isolation. We operate in an environment where our depositors want a certain rate of interest, and where we lend not only to the private sector, but we also lend to the public sector. I think that the issue is actually not the interest rates. I think the issue is the feasibility of the projects. And we found out that there is significant demand. But obviously in Africa, interest rates are generally higher because inflation is higher. And I think there's really a dynamic there between the private sector, the banking regulators, and the government in terms of how we lower interest costs to borrowers. That is a problem that is not unique to Ghana, so I think you're in very good company as far as that's concerned. But you raised another point which is very important. You raised the point about banks not being big enough or viable enough to adequately, or not being adequately capitalized to finance major projects and development projects. That's a very important issue. We have engaged governments across Africa, and we've told them very bluntly and very clearly that you have to build bigger banks. For example, ourselves and my colleague from UBA have been very active in financing crude oil imports into Ghana. Each lot is about $150 million. You've got to be of a certain size to do that. And I think that one of the messages we send across to all the countries in Africa is, if you have a lot of small banks, you'll never have enough financial capacity within your country to finance development projects. We work across 32 countries, and one of the classic examples is Nigeria. Nigeria 5 years ago, you'd struggle to do a $100 million project. Today, a $1 billion project gets financed by local banks, and it's just changed the environment in that country. And I think that's something that I think we want to pursue, and it's something that I think you've got a very good point there, and it's something that we share with you in terms of the need to address that concern. On the issue of the Summit for Diaspora, I'll go beyond that. I have said, Herbert, we are bankers. We don't do conferences and summits, but he does. We're willing to support him, and he knows we've always supported African investors. We think they're doing a brilliant job. They're selling Africa in the right way, very objectively, and in markets where typically the African story is not always been told very carefully. So, Herbert, it's up to you. But I'll say go beyond the diaspora. Have an Africa summit. How do we get South Africa to invest in the rest of Africa? How do we get Egypt, where there's quite a bit of capital, to invest in the rest of Africa? How do we get Nigeria to do that? Because we're not focusing enough on that. And for example, one of the largest investors in Africa today is the Dangote Group in the cement space. And they're spending $3 billion across Africa. No other cement company in Africa, in the world is doing that. Okay, because they consider Africa a greater risk, but he understands the African risk. The Ecobank Group has invested over $1 billion in the last 5 years in the African banking space. Because we are comfortable with Chad, we're comfortable with Liberia. We're not afraid of Africa. And I think there is a need for us Africans to also invest, because that sends a good story. So the challenge is on. Okay. The issue about the level of intra-Africa trade, that is growing. I mean, the story is not always what it is. There's a formal and there's an informal trade. There's always been a huge informal trade across Africa. What we're trying to do is have the banks work with the authorities to try and build a much larger formal intra-Africa trade. But the general trend has been positive. And I must say that the regulators as a whole have been willing to look at exceptions. We would prefer that they take out all the impediments to intra-Africa trade. But I think that's going to be a journey rather than an event. And I think banking the SMEs and microfinance, we have 5 microfinance banks across Africa. We're growing that number. We bank the SMEs. The SMEs give us the highest level of non-performing loans, as I'm sure we all know. But again, it's a challenge that we have to overcome. The fact of the matter is that the SME and the microfinance space are the largest bankable space in Africa as we speak. So we'll continue to iterate, to modify our models, and to address it, but we're not shying away from that challenge. I'll stop there. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.